You were told owning a home builds wealth. That was the first lie. The second lie was that you own anything at all. The bank owns it. The county owns it. The maintenance costs own it. You own a 30-year contract to transfer money upward while calling it equity. And the silent phase is the decade where you realize your net worth went up on paper while your actual freedom to spend, move, or retire went down in every direction that matters. This is not about bad luck. This is about a system that re-engineered the definition of ownership so that debt looks like progress and a mortgage looks like security. They didn't steal your wealth. They convinced you to lock it inside an asset you can't liquidate without destroying your life. And the trap was built so carefully that you thank them for it. Right now, millions of middle-class families are living inside the wealthiest poverty ever designed. Their home value went up 40%. Their property taxes went up 35%. Their insurance doubled. Their equity exists only if they sell and leave. But leaving means buying into the same system at a higher price or renting at a rate that swallows what the mortgage used to cost. So they stay. And the system extracts every year, every tax cycle, every insurance renewal, every repair that can't wait. The home doesn't free you. It freezes you. And while you are frozen, the costs rise and your income doesn't. This is the middle-class trap at industrial scale. And if you don't see the stages, you'll stay inside it until you retire into a house you can't afford to maintain on a fixed income that was calculated 20 years ago. The blueprint for this didn't start with your generation. It started when governments and banks realized that homeownership could replace pensions as the psychological anchor of stability. After World War II, the suburbs exploded across America. The GI Bill offered loans at rates no private bank would match. Millions of returning soldiers bought homes with almost nothing down. It looked like a gift. It was a gateway. What the government created was a generation that defined success as owning property and raising children inside debt. They worked 40 years to pay off a house whose value rose only because the next generation took on bigger loans to buy it. The wealth was never real. It was transferable inflation. And the banks collected interest the entire way up. By the 1980s, the system evolved. Mortgages stopped being agreements between you and a local bank. They became securities. Your debt was sliced, packaged, sold to investors in New York, London, Tokyo. The house was no longer just your shelter. It was a financial product generating revenue streams for institutions you would never meet. And when your mortgage became a commodity, something shifted. The incentive was no longer for you to pay it off early. The incentive was for you to keep borrowing, keep refinancing, keep extracting equity you didn't really have, so the debt could be repackaged and resold. The longer you owed, the more the system profited. Paying off your house became financially irrational within their model. Then came the 2000s. Lending standards collapsed. People with no income verification were approved for $500,000 loans. Subprime mortgages were marketed as opportunity. Adjustable rates were sold as flexibility. When it imploded, millions lost their homes. But here is what most people missed. The lesson the banks learned was not to stop. It was to make the trap more polite. After the crash, lending tightened for the bottom, but expanded for the middle. Mortgages became safer on paper, but more expensive in reality. Rates stayed low, but home prices doubled. Debt-to-income ratios crept upward. And the same families who watched their parents lose everything in foreclosure signed 30-year contracts convinced this time was different. This brings us to stage one. The promise. You are told that renting is throwing money away. You are told that a mortgage is forced savings. You are told that real estate always goes up. The comparison is always designed to make renting look like failure and buying look like the only adult choice. But the promise hides the structure. The mortgage is not savings. It is a liability that requires decades of continuous income to service. The equity you build in year 5 is invisible. The interest you paid in year 5 is gone forever. And if you sell before year 10, the closing costs and agent fees erase most of what you thought you gained. But the promise doesn't mention that. The promise shows you retired couples on porches. It shows you wealth. It doesn't show you the 30 years in between. Stage 2 is the deadlock. You sign the paperwork. You move in. The first year feels like victory. Then the property tax bill arrives. Then the insurance renewal that's 18% higher than quoted. Then the water heater fails. Then the roof needs work. Then the HVAC system dies in summer. The mortgage payment was predictable. Everything else isn't. And because you spent everything you had on the down payment and closing costs, you have no cash reserve. So you put the repairs on credit. Or you skip them. Or you pull from retirement accounts and pay penalties. The house is now costing you more than the mortgage. And you can't leave because selling means paying a realtor 6%, paying off the loan balance, and moving into a market where prices went up faster than your equity did. Stage 3 is where the system turns, the hidden cost layer. You're not just paying the bank. You're paying the county every year for the right to keep what you think you own. You are paying insurance companies for protection against disasters that statistically will not happen, but contractually must be covered. You are paying HOA fees that arise every year and fund nothing you can see. You are paying for repairs that cost twice what they should because you are now responsible for every pipe, every wire, every surface. Renters call the landlord. You are the landlord. And the cost of being your own landlord is eating the equity you were promised. Then comes stage 4, the equity illusion. Your home value goes up. You check Zillow and feel wealthier. But you cannot spend Zillow numbers. You can only borrow against them. And borrowing against your home equity means adding debt to access your own money. The wealth is trapped. It exists in theory, it dies in practice. Meanwhile, your income hasn't kept pace. Your raises were 3%, inflation was 8%, property taxes went up 7%, your grocery bill went up 20%. The gap between what you earn and what you owe is closing. And the thing that was supposed to make you richer is making you cash poor while asset rich. You are wealthy on paper and struggling in reality. Stage 5 is the mobility trap. You want to move for work. You want to downsize. You want to relocate closer to family. But moving means selling. And selling means losing 6% to agents, 2% to closing costs, and accepting whatever the market offers that month. If you bought in the last 5 years, you might break even. If you bought in the last 2 years, you are underwater the moment you pay the fees. And even if you profit, you are buying into the same market at the same inflated price. So you stay, not because the house works for you, because leaving costs more than staying. The asset became a cage. Stage 6 is the refinance cycle. Rates drop. You refinance to lower your payment. But lowering your payment means restarting the 30-year clock. You were 8 years into your mortgage. Now you are 0 years in. You just erased 8 years of equity to save $200 a month. And the bank collected another round of closing costs and reset the interest front-loading. Or worse, you refinance to pull out equity because you need cash. The hospital bill, the tuition payment, the failed business, you turn your home into an ATM. The equity you spent 15 years building is now debt again, and the system starts over. You are not building wealth. You are renting money from your own future. This is not a conspiracy. This is a business model. The mortgage industry makes more money when you borrow more and pay longer. The insurance industry makes more when your home value rises because your premiums are tied to replacement cost. The county makes more when your assessment goes up because your taxes are a percentage of value. The real estate industry makes more when prices inflate because commissions are a percentage of sale price. Every entity in the system profits from you staying in debt and prices going up. The only entity that doesn't profit is you. You are the fuel. And the system is designed to burn you slowly enough that you call it homeownership instead of extraction. Here is the math they don't say out loud. A $400,000 mortgage at 4% over 30 years costs you $573,000. You pay the bank $173,000 in interest alone. That's before property taxes, that's before insurance, that's before maintenance. If you add those costs, the total cost of owning that $400,000 home over 30 years is closer to 900,000. And if the home's value goes to 600,000, you didn't make 200,000. You spent 500,000 to gain 200,000. That's a loss, but it's sold as wealth. Now layer in inflation. The dollars you pay in year 28 are worth less than the dollars you paid in year 3. So the bank gets paid in strong dollars up front and weak dollars at the end. You get the opposite. You borrowed when the dollar was stronger. You pay it back when the dollar is weaker. But your equity is calculated in weaker dollars too. So the wealth you think you built is worth less in purchasing power than the debt you took on. The system inflates, you deflate. Look at the behavior it creates. You stop taking career risks because you can't miss a mortgage payment. You stay in jobs you hate because you need the income stability. You don't start the business. You don't take the sabbatical. You don't move across the country for the better opportunity. The house chains you to predictable income. And predictable income means you are replaceable. You are no longer optimizing for growth. You are optimizing for survival. The mortgage turned you into a revenue stream for the bank and a risk-averse employee for your boss. The house didn't give you security. It gave you obligations that require security you no longer control. And here is the "you are here" check. If your monthly housing costs are more than 30% of your take-home income, you are in stage 2. If you have under 3 months of expenses saved while living in a home you own, you are in stage 3. If your home value went up but your credit card balances also went up, you are in stage 4. If you have considered moving but realized you can't afford to sell, you are in stage 5. If you have refinanced more than once or taken a home equity loan to cover non-housing expenses, you are in stage 6. The system doesn't announce the stages. You live them without realizing the progression is mechanical. The mistake was believing that home ownership and wealth are the same thing. They are not. Ownership without liquidity is a title. Wealth is what you can deploy. And the middle class has been convinced to lock their deployable wealth inside an asset that costs money to maintain, penalizes you for accessing, and requires a 30-year horizon to maybe break even after fees and inflation. The rich don't do this. The rich buy property as one part of a diversified portfolio. They don't emotionally anchor to it. They don't drain their liquidity to get into it. They use leverage carefully and exit ruthlessly when the math stops working. The middle class does the opposite. They drain everything to get in. They stay forever. They call it home. The rich call it inventory. What do? First, stop measuring your wealth by your home value. Your net worth is not what Zillow says. Your net worth is what you could access in 30 days without destroying your life. If you can't turn your equity into cash without selling your shelter, it's not wealth. It's a store of value you can't use. Second, if you are not yet in a mortgage, do not buy unless the total monthly cost, including taxes, insurance, maintenance, and HOA, is under 25% of your gross income. Not your take-home, your gross. And you need 6 months of total expenses saved before you close. If you can't meet that, rent and build liquidity. Liquidity beats locked equity in every scenario except the one where housing prices go up forever and your income rises with them. That scenario is a myth. Third, if you're already in a mortgage, calculate your true cost of ownership. Add your mortgage, taxes, insurance, HOA, and average monthly maintenance. Multiply by 12. That's your annual cost. Now divide your home value by that number. If the result is under 15, you're paying too much to live there. You are not building wealth. You are subsidizing the system. Your options are to increase income, decrease costs, or plan an exit. The exit doesn't mean sell tomorrow. It means you stop treating the house as your retirement plan and start building liquid assets outside of it. Max your retirement accounts. Build an index fund portfolio. Create an emergency fund that isn't a home equity line. The house can be part of your net worth. It cannot be all of it. Here is what they will never tell you. The American dream of homeownership was not designed for your freedom. It was designed for your compliance. A population that owns homes is a population that doesn't protest. They don't strike. They don't take risks. They don't challenge the system. They pay their mortgage. They mow their lawn. They vote for stable taxes and rising property values. The house makes you predictable. Predictable labor. Predictable consumer. Predictable taxpayer. The system doesn't want you to own your home free and clear. It wants you to owe on your home for as long as possible. Because the debt is the control. And control dressed as ownership is the most effective trap ever designed. The middle class bought homes and got poorer because the structure was built to produce that outcome. Prices rose faster than incomes. Costs rose faster than equity. Debt replaced savings. And the illusion of wealth replaced the reality of liquidity. You are not failing. The game is rigged. And the only way to win is to see the board clearly and stop playing by their rules. If this opened your eyes to the cage you are living in, subscribe, because in the next video we dismantle the rest of the illusion.